Section 4, Cost Volume Profit Level B questions. In September, Smith Company had the following financial statement amounts related to the production of 1,000 units. Direct materials, 30,000, depreciation expense, 12, sales revenue of 88, direct labor of 10, rent expense of 13. Okay, how much is the contribution margin? Well, what we need is sales revenue per unit. Okay, we need it in total. Sales revenue is 88,000, so we have to deal in total first. Minus the variable cost of direct material, 30,000, and depreciation, no, direct labor of 10,000. Those are the only ones, so that's 40,000. And therefore, the total profit, or the total contribution margin, sorry, not profit, is 88 minus 40, 48,000 is the total contribution margin. Total contribution margin. And they want to know per unit, so we divide through by 1,000 units, and we get $48 per unit. So the answer here is A. Hess Inc. sells a single product with a contribution margin of $12. All right. Fixed cost is $74,400. Current year's sales of $100,000. How much is the break-even point? Well, for the break-even, I don't need that sales of $100,000. I want break-even is equal to fixed cost over, and we have the answer in units, so therefore contribution margin per unit, which is $74,400 divided by 12, which equals 6,200 units. Well, the answer here then is C. Number 3, fixed cost equal 12,000. Unit contribution margin is 20. The number of units sold equals 1,600. What is the operating income? Well, total contribution margin is equal to $20 per unit times the number of units. And that will equal 32,000. That's your total contribution margin. That's not your operating income. You must subtract then fixed cost, which is 12,000. And your operating income is 20,000. And therefore the answer is B. How many units would you have to sell to yield a target operating income of 22,000? Okay. Assuming the fixed costs are 2 and the variable cost per unit is 15. Well, let me see. The selling price is 20. So let's get the selling price, 20. Variable cost, 15. We need the contribution margin. And that is $5 per unit. Now, how many units do I have to sell? Well, the number of units then is I need enough to cover my fixed, $2,000, plus give me a profit of $22,000. And I get it all on $5 per unit. So therefore, the number of units here will be 4,800. So the answer then is A. Martin Worldwide sells a single product with a contribution margin of 12 per unit, fixed cost of 24. What's the break even? This one's very easy. You should know by now. Simply the fixed cost, which is 24,000, divided by, and they give us a contribution margin of 12, and my answer is 2,000 units, because I use the contribution margin per unit, and my answer then is D. ABC Bread sells a box of bagels. Contribution margin ratio 62.5%. Its fixed costs are $150 per year. How much sales dollars do they need to break even? Well, okay, they break even then. They want it in sales dollars. Its fixed costs divided by contribution margin percentage. We've got both of them here. Fixed cost, 150,000. CMR, 0.625. And the answer is 240,000 in sales is needed. So the answer here is C. The Tessmer Company has fixed costs of 400 and variable costs of 75%. So the contribution margin is 25% of selling price. To realize profits of 100,000 from sales of 500 units. What is the selling price per unit? Ooh, this is a little tricky. Well, we sold enough to give me 400,000, cover my fix. We sold enough to cover my fix. So my total contribution margin would have been enough to cover my fix plus give me a profit of 100,000. So that means we sold 5 million or 500,000. My total contribution margin was 500,000, and the number of units that I sold was 500,000 units. Therefore, the contribution margin per unit was equal to $1. And if that $1 is 25% of selling price, then the selling price had to be $4. You take 1 and divide it by 0.25, and your answer is C. Now, that's a little more difficult, that question. Tricky. Saver Company produces only one product. Monthly selling expense is 12. Unit sales 2. And the unit contribution margin is 10. How much is the net profit? Well, you go over the total contribution. Get you the total contribution is the number of units, 2,000, times $10 per unit. Okay, so the total contribution margin is 20,000. That's my contribution margin. And that goes to cover my fixed cost, which is 12,000, and the rest is pure profit. And the answer here is 8,000. Okay, number 9. The following monthly data are available for Wackadoos, Inc., which produces only one product. Selling price, 42. So selling price, 42. Variable expenses, 14. Therefore, contribution margin is 28. Total fixed cost, 42. Projected sales was 4,000. How much is the margin of safety? Well, the margin of safety is the projected sales in excess of what I need to break even. So therefore, I must figure out what is to break even in units. And that would be fixed costs of 42,000 divided by my contribution margin per unit, which is $28. And what I get here is 1,500 units. So the margin of safety, do they want it in percentage? No, they just want margin of safety, is what I expect to sell minus what I need to break even. And the margin of safety then is expressed as 2,500 units. That's how many units I can lose in sales before I get down to zero profit. So the answer is D. Number 10 has actual sales of 400, break even of 260. How much is the ratio? Well, okay, let's just do the margin of safety first. And this is in dollars. The one before was in units. So it's 400,000 minus what I need to break even, 260,000. And that equals 140,000. And the margin of safety percentage is equal to the margin of safety over sales, which is 140 over 400, And the answer is 35,000. So A. There you go. How did you do on the B question?